Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on Monday, July 3rd, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's get to that. Because tonight we've got a packed episode for you. We're going to be discussing a potential game changer in the US as the SEC might be warming up to the idea of a spot Bitcoin ETF. Then we'll take a trip to Eastern Europe, where Belarus is making moves to ban peer-to-peer crypto transactions. From there, we'll head to Asia, where Singapore is tightening its grip on crypto regulations, and China is making a significant appointment that could have far-reaching implications for the crypto world. And Thailand is following Singapore's lead in banning crypto lending services. Finally, we'll end up our global tour in North America, where a massive relocation in the Bitcoin mining industry is underway. So, buckle up and prepare for a whirlwind crypto world tour. Let's go. The U.S. Securities Exchange Commission has been hesitant to approve a spot Bitcoin exchange-traded fund. Still, brokerage firm Bernstein believes that the chances of approval are quite high. The SEC has already given the green light to futures-based Bitcoin ETFs, including those that leverage futures pricing from regulated exchanges like the CME. The SEC claims their concern with a spot Bitcoin ETF is that spot exchanges, such as Coinbase, are not under its regulation. That makes spot prices unreliable and susceptible to manipulation. Despite these concerns, the SEC has received numerous applications for a spot Bitcoin ETF. BlackRock, a major asset management firm, recently filed paperwork for a spot Bitcoin ETF, prompting other asset managers like Invesco and WisdomTree to do the same. Grayscale, another asset manager, is currently trying to convert its Grayscale Bitcoin Trust into an ETF. That's a move that is currently under review by an appeals court. The absence of a Bitcoin spot ETF has led to the growth of over-the-counter products like the Grayscale Bitcoin Trust. These products are more expensive, less liquid, and less efficient than a regulated Bitcoin ETF would be. The SEC would prefer to deal with a regulated Bitcoin ETF led by mainstream Wall Street participants and regulated exchanges rather than having to manage a Grayscale over-the-counter product. In a surprising move, BlackRock has delayed its rebid for a spot Bitcoin ETF. Eric Balchunas is a senior ETF analyst for Bloomberg. He proposed three theories. The first is that BlackRock may have already refiled, but a delay in updating the NASDAQ website has prevented public acknowledgement. The second theory is that the SEC is seeking more detailed surveillance sharing agreement information, which could be causing the delay. The third theory is that BlackRock may have lost interest due to the success of ARK Invest, which filed for a Bitcoin ETF in April and has since surged ahead. However, Balchunas finds this theory unlikely. Regardless of the reason for the delay, the SEC's recent communication with exchanges about unclear and insufficiently exhaustive bids for spot Bitcoin ETFs has led to a shakeup in the crypto market. Several other companies, such as Fidelity, Invesco, VanEck, and WisdomTree, have refiled their proposals, listing Coinbase as their exchange partner. And speaking of regulatory changes, don't forget to hit that like button if you're enjoying our podcast. Now, let's take a look at how another country is making waves in the crypto world. Over in Eastern Europe, Belarus is planning to introduce legislation to ban peer-to-peer cryptocurrency transactions. So let's dive into that. The Eastern European country of Belarus is planning to introduce legislation to ban peer-to-peer cryptocurrency transactions. This move is aimed at reducing fraudulent activities, as stated by the Ministry of Internal Affairs. The proposed law will allow citizens to conduct cryptocurrency transactions only through exchanges based in the Belarus Hi-Tech Park, a measure intended to increase transparency and control. The ministry has identified 27 individuals providing illegal cryptocurrency exchange services, which are often used by fraudsters to launder the proceeds of their activities. The proposed legislation is designed to make it difficult for criminals to withdraw money obtained through illegal means, making it unprofitable for IT fraudsters to operate in Belarus. This move is seen as a significant change in the country's approach to cryptocurrency, which until now has been quite progressive. Belarus legalized cryptocurrency transactions in 2017, and in 2018, the Supervisory Council of the Hi-Tech Park approved additional guidance for the regulation of token-related activities. The Hi-Tech Park is a tax regime in Belarus aimed at developing tech businesses. It's been a hub for companies involved in mining, creating, and acquiring crypto tokens without declaration. However, this proposed ban on P2P transactions has raised questions about its enforceability. Similar bans in other countries, like China, have proven difficult to uphold. Critics hold that banning peer-to-peer transactions goes against the original use case of Bitcoin as outlined by its creator Satoshi Nakamoto. The Ministry of Internal Affairs has yet to reveal how it plans to effectively enforce such a ban. The proposed legislation marks a significant shift in Belarus's approach to cryptocurrency. The country once led the way in crypto adoption. It now seems to be taking a more cautious stance. This change in policy could have significant implications for the country's tech sector and for the wider cryptocurrency market. It remains to be seen how the proposed ban will be implemented and its impact on the country's crypto landscape. From Eastern Europe, we now move to Asia. But before we do, remember to follow us for more in-depth crypto analysis. Now, on to Singapore, where the Monetary Authority of Singapore is tightening regulations for cryptocurrency service providers. Let's see what this means for the crypto landscape in Singapore. The Monetary Authority of Singapore announced new regulations for cryptocurrency service providers. By the end of the year, these providers will be required to deposit customer assets in a separate trust for safekeeping. This decision follows a public consultation launched in October 2022 to enhance consumer protection. These rules are designed to reduce the risk of loss or misuse of customer assets and to facilitate the recovery of these assets in the event of the provider's insolvency. In addition, the authority has also imposed restrictions on cryptocurrency service providers. They are now prohibited from facilitating the lending and staking of tokens to retail customers. However, the institutional and accredited customers still are allowed to use these services. The authority also asked for public feedback on these new requirements, indicating that the stance on these issues may change. The new regulations also require crypto firms to conduct daily reconciliation of customer assets and to maintain proper books and records. They must also ensure constant access and operational controls to customer tokens. Despite these new regulations, the agency urged customers to remain vigilant due to the high risk and speculative nature of digital payment trading. This decision to implement these new regulations is seen as a response to the recent collapses of Terra Luna and FTX, which led to significant losses for customers. These new rules aim to prevent such incidents from happening in the future and to ensure that the cryptocurrency market of Singapore remains secure and trustworthy. However, some industry experts believe that these new regulations are not as strict as those in other jurisdictions. For example, unlike Hong Kong, which requires 98% of customer crypto to be held in crypto wallets, Singapore only requires 90%. Furthermore, cold wallets are not required to be onshore in Singapore, unlike in Hong Kong. Despite these differences, the new regulations are seen as a step in the right direction for the Singaporean cryptocurrency market. They demonstrate commitment to protecting consumers and maintaining the integrity of the market. However, they also highlight the challenges that regulators face in balancing the need for consumer protection with the desire to support the growth and development of the cryptocurrency industry. From Singapore, we now head to China, but before we do, don't forget to subscribe and hit that notification bell. Now, let's talk about a significant move in China's financial sector. They appointed a known Bitcoin skeptic as the senior Communist Party official at the central bank. Let's unpack what this could mean for the future of crypto in China. The Chinese government made a significant move in its financial sector by appointing Pan Gongsheng as the senior Communist Party official at its central bank. Pan is a known skeptic of Bitcoin and cryptocurrency. He does have experience in the financial sector. He's been with the People's Bank of China since 2012. He previously served as the deputy governor and led the central bank's group on remediation of internet financial risks. This group was responsible for regulating crypto firms and limiting the use of cryptocurrency in the country. He once made a statement in 2017 suggesting that Bitcoin's demise was inevitable. He said, "If you sit by the river and watch, one day the corpse of Bitcoin will float in front of you." Local media widely reported this statement at the time. He also referenced an article which described the Bitcoin bubble as the latest example of wild speculation. Pan's appointment comes as he replaces the retiring Yi Gang. According to sources cited by the Wall Street Journal, Pan is expected to rise to the position of governor. His appointment has cast a shadow over the hopes of a revival of cryptocurrency in China, despite some positive signs emerging from Hong Kong. So here's my take on it. Pan's appointment is a clear indication of China's stance on cryptocurrencies. Given his past statements and actions, it is unlikely that China will ease its restrictions on cryptocurrencies under his leadership. This could potentially impact the global cryptocurrency market as China significantly influences the financial world. Furthermore, this skepticism towards Bitcoin and cryptocurrencies could reflect the Chinese government's concerns about its financial stability and control. Cryptocurrencies, with their decentralized nature, pose a challenge to traditional financial systems and regulatory frameworks. Therefore, China's move to appoint a crypto skeptic like Pan could be seen as a strategic decision to maintain control over its financial system. Pan's appointment as the top official at the PBOC sends a strong message about China's approach to cryptocurrencies. It suggests China is likely to continue its strict regulation of the crypto industry, which could have significant implications for the global crypto market. However, it also highlights the ongoing debate about the role of cryptocurrencies in the financial system and the need for appropriate regulatory frameworks. From China, we now move to Thailand. But before we do, if you're enjoying our news updates, give us a thumbs up. It helps us reach more people. Now, on to Thailand, where they've joined Singapore in banning crypto exchanges from offering lending services. Let's look at the details. As reported, Thailand has joined Singapore in banning crypto exchanges from offering lending services. This move is part of a broader strategy by the country's regulators to prioritize investor protection in the crypto space. The ban was announced by the Thailand's Securities Exchange Commission. It applies to, quote, depository services that offer returns to depositors and lenders. That effectively prohibits exchanges from offering both lending and staking services. In addition to the ban, the Thai SEC introduced a mandatory trading risks disclaimer, which must be clearly visible to customers. This disclaimer warns that cryptocurrencies are high risk and that investors could potentially lose their entire investment. Exchange operators are required to ensure users acknowledge these risks before consenting to use their services. Furthermore, investor suitability assessments will be used to determine how much users are entitled to invest in crypto. These new regulations are set to take effect on July 31st, 2023. The SEC and its central bank have previously banned the use of crypto payments for goods and services in order to maintain the stability of the financial system and broader economy. While trading and holding assets are still allowed, the SEC and the central bank have issued a statement warning that most digital assets are developed from decentralized public blockchain technology, which lacks a regulatory body and established security standards. If problems arise, users may not be protected. And multiple payment systems can create confusion or incur costs if consumers use multiple systems. These regulatory moves reflect a growing trend among global regulators to tighten controls over the crypto industry in the face of its rapid growth and the potential risks it poses to investors in the financial system. The actions taken by the Thai and Singaporean authorities could set a precedent for other countries grappling with how to regulate the burgeoning crypto industry. From Thailand, we now head to North America. Let's talk about a massive relocation happening in the Bitcoin mining industry. Hut 8 is relocating 6,400 mining rigs from Canada to Texas. Let's find out why. The Bitcoin mining company Hut 8 is in the process of relocating 6,400 mining rigs from its inactive site in North Bay, Ontario. The company is seeing an increased demand for artificial intelligence and high-performance computing. The miners are being moved to Texas, with the company planning to have them operational by the end of July. This will provide an operational capacity of 600 petahashes per second, increasing Hut 8's total installed hash rate to 3.2 exahashes per second. The company has also started using its infrastructure to power services outside of its Bitcoin mining operations. In other news, the European Union is planning to work more closely with Japan in the AI and chip sector. This move is part of the EU's strategy to reduce its reliance on China. This collaboration will include monitoring the chip supply chain and boosting the exchange of researchers and engineers. The EU will also support Japanese semiconductor companies interested in working with the bloc. They believe it's important to secure the supply chain of semiconductors, which are used in a variety of products, from cars to smartphones, and have potential military applications. The industry has rebounded well over the past few months, with more momentum than originally anticipated. This is partly due to some of Hut 8's peers following their lead in the high-performance computing and AI spaces. AI and high-performance computing continue to attract investment, with companies like Inflection AI raising $1.8 billion for the construction of a 2,200-strong NVIDIA H100 Tensor GPU cluster. The EU is not the only region reassessing its semiconductor supply chain sector. Countries like the United States are considering bringing semiconductor manufacturing back to their shores. The EU's partnerships with top Asian countries with strong technology sectors are part of its effort to de-risk China. In that same vein, Britain has announced support of £1 billion for its semiconductor industry, focusing on boosting its domestic chip-making capabilities and reducing its dependence on foreign players. And it didn't have to be like that for the United States. We made a conscious decision to let other countries take the lead in manufacturing chips, thinking that we would be better off if we focus on the code that runs from those chips. This should be a stark warning to the US not to let the same thing happen to crypto. Don't let places like China and Singapore take the lead in advancing the fintech sector. We don't have much time to get our act together. If we continue to delay, we will end up playing catch up to Hong Kong, Singapore, the EU, and the UK. So what happened? We started off with the US SEC likely to approve a spot Bitcoin ETF, a move that could significantly impact the crypto market. We then moved to Belarus, where the government is planning to ban peer-to-peer crypto transactions to curb fraudulent activities. In Singapore, the Monetary Authority is tightening regulations for cryptocurrency service providers, aiming to enhance consumer protection and reduce the risk of loss or misuse of customer assets. Meanwhile, in China, the appointment of Bitcoin skeptic Pan Gongsheng as a senior official at the central bank signals a continued strict stance on cryptocurrencies. Thailand joined Singapore in banning crypto exchanges from offering lending services, prioritizing investor protection in the crypto space. Lastly, we discussed Hut 8's massive relocation of 6,400 mining rigs from Canada to Texas, a move driven by increased demand for artificial intelligence and high-performance computing. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.